We had 500 accounts back then. Today we have 145,000 accounts. I started here and he said, do mortgages and RSPs. I was 22. I said, I don't really know what either of those things are. He says, what the hell did they teach you in business school? And he threw me a copy of the Income Tax Act and said, go figure it out. Now in my 40s, I think I understand the markets pretty well. If that balance is as close to right as it can be, it serves the market pretty well, both investors and entrepreneurs. And we're as close to the sweet spot as we've probably ever been. And Olympia is fortunate enough to be kind of an important service provider to those people. Now my role, admittedly, as we've grown, I'm doing less of the entrepreneurial stuff I like, which is working with guys that want to raise money and showing them how to do it.
I think there's such an interesting point of what Olympia brings to the table, right? You're actually a hub of bringing business, entrepreneurs together with investors, and I love that. Let's give our listeners a little bit more insights into who Craig is. So Craig, you've been doing this, you said 20 some years. Give me a little bit of background. I mean, how did you morph into the role that you're playing today?
Well, I finished university with a business degree in early 2000s. And Olympia was started by my father. And I got 2 job offers, one in the music industry, which I loved, and one was to come work for my dad. And I'd gotten an MP3 player at the time, and I saw that the retail music industry was circling the drain. So I decided to come work for my dad. Him and I weren't, super close, but I knew he was a businessman. I didn't know much else. I didn't know what Olympia was, and Olympia was small. We only had 19 staff when I started. Today we have, 300 and change. We had 500 accounts back then. Today we have 145,000 accounts. So I started here, and he said, well, you do mortgages and RSPs. And I said, I was 22. I said, I don't really know what either of those things are. He says, what the hell did they teach you in business school? And he threw me a copy of the Income Tax Act and said, go figure it out. So I spent 2 years talking to mortgage brokers in Western Canada. They were, a lot of them were doing private mortgages through people's RRSPs. It's something I didn't touch on enough, which is, showing people how they can just do a one-off deal where they can use their RRSP to lend it to another Canadian that's arm's length from them, and they're secured by a piece of real estate. It's a pretty cool little trick. So I spent, better part of 2 years doing the dog and pony show in Western Canada, meeting a lot of guys who had mortgage investment corporations and trying to get them to use our RRSP accounts instead of Canadian Western Trusts, who we bought out last year. So that was good. Finally, that came full circle. Then we realized there's only so many mortgage brokers to talk to. So we looked at my dad's background, which was he raised money for oil and gas deals as I was growing up using prospectus exemptions and RSPs. And we said, well, what if we could take that knowledge that he has and spread it to the broader business community? So we did that, and seemed like there was an appetite from the business community to use RSPs for deals, but this was during those dark, unregulated days. So a lot of the entrepreneurs who ended up raising money either lost the money through bad management, fraud, whatever it was. So a regulatory shift was on the horizon, and through working quite extensively with regulators on an opposition and on a cooperation side of things, new rules came into play that have been evolved over the last few years. And I kind of took, the position that I should be a good advocate for our clients. It's hard to stand up to a regulator when they regulate you, whereas the securities commissions don't directly regulate us. So I kind of became the sword swinger for the industry, and I've worked extensively with regulators on crafting what's a pretty good rule book. It's not perfect, but it's pretty good. Mm-hmm. And it's just the marketplace has grown as it's legitimized. There's more people willing to raise money for private companies, and there's more people willing to invest. And we've kind of been a centerpiece in that marketplace. I've learned a lot. I was pretty naive in my 20s. By my 30s, I thought I had it figured out. Still didn't quite have it figured out. Now in my 40s, I think I understand the markets pretty well, and understand the balance between capital formation and investor protection, and that if that balance is as close to right as it can be, it serves the market pretty well, both investors and entrepreneurs. And we're as close to the sweet spot as we've probably ever been. And Olympia is fortunate enough to be kind of a important service provider to those people. Now my role, admittedly, as we've grown, I'm doing less of the entrepreneurial stuff I like, which is working with guys that want to raise money and showing them how to do it. I did a lot of that. I worked with hundreds of promoters over the years, showing them these tools. And now I run a financial institution. We administer 13-14 billion dollars worth of assets. So that's tiny compared to the big banks, but it's big enough that I have to have my eye on the ball in terms of the operations of our company. So it's where things like this webinar, my chances at fun at to actually do the things I like, which is teach people. Because today there's a lot of work on compliance and capital ratios and risk and compliance and running an FI, which is not as fun as being an entrepreneur. But I take a lot of pride in the fact that we've grown a fairly large company, and I've been running it now for fairly close to 10 years, and has grown into something we're really proud of and we take seriously. But unfortunately, that takes away from a lot of the fun, which is working with people like yourself and spreading the good word about how these tools work.
Well, I love it. I think there's such an interesting point of what Olympia brings to the table, right? You are a resource, you're a source, you're actually a hub of bringing business, entrepreneurs together with investors. And I love that. But, you're really stepping into, not that you haven't before, but, part of what we're doing here is to give people insights into Olympia Trust, to you as the CEO, but into the educative component of it that opens up the doors of opportunities for entrepreneurs. And so as we kind of look at what Olympia stands for, is really the kind of the benchmark for regulation, for doing it the right way, for supporting the success of both the entrepreneur and the investor. I'm wondering and I don't want to put you on the spot, so I'll give you a minute to think about this, Craig, but if you look at, this many years into it, and given what you've done, you've sat on boards, you've been part of creating regulations, or, actually having conversations about it. But if there was 1, 2, 3 top mistakes that business owners, entrepreneurs make, or top 1, 2, 3 mistakes that investors make, can you kind of coordinate that? Is there 2 or 3 things that would bring attention to those common mistakes or oversights that people make?
Yeah, I mean, I think to touch back on, what you said, like Olympia is a hub, but we've seen the successes and failures. And unfortunately, in our role as kind of an intermediary, we don't really have any sway in whether people do good or bad, but we have seen a lot, right? And that's where I can say, from an entrepreneurial perspective, the biggest mistake I've seen with guys raising money is biting off more than they can chew. Sometimes groups go to the market with an idea and it's a really great idea, and investors just throw capital at them. And sometimes they take in more investor money than they should, and that never leads to good outcomes. They've never raised money before, and all before they have $5 million of investor money. And if it has a 6 or a 7 or an 8% hit drag on it because they promise that to the investors, well, Jesus, they sometimes try and get creative, and that never goes right. So proper pacing yourself as an entrepreneur is really important. And whether that's in real estate or any other aspect. I mean, again, if you say you're going to go start a private mortgage fund and you're going to get people 9%, well, you got to get that money deployed pretty quickly, which sometimes means bad decisions are made because you're trying to earn a yield. So pace yourself. That's number one. From an investor perspective, I mean, this is the oldest adage in the book, but if it sounds too good to be true, it is. It's not, it probably is. It is. I mean, we've seen, not through Olympia, but I mean, just through watching the regulatory landscape, people invest in products that have absurd returns, with no risk. That world doesn't exist. This is me saying it, not the Securities Commission. The world of exponentially high returns with no risk does not exist. Now, having said, don't believe everything you read. some exempt products that you have to sign the form, like this first mortgage MIC that said it was super high risk. It's not super high risk. It has different risks in public securities, but it's not any more risk. Look at track records, look at the management team, look at the background of these groups, and make informed decisions to investors. That's the biggest thing. Make informed decisions. Read up as much as you can, and don't rush into anything. That's another thing for investors. If there's a panic to get in, maybe you should just wait. Don't make the same mistakes in the private markets that you make in the public markets. I mean, people go, again, stocks just going up and up and up. So people invest. They panic. They make a rush decision. And then it's going down, down, down. So they sell. Well, don't do that in the exempt market. That exists too, where there's a rush and a pressure to get into something. That's also a red flag. Read up on the Securities Commission's websites. The OSC has a great investor education website. I think it's Get Smart About Money, where it talks about the things to watch for. Watch for those things. But there are lots of good private opportunities. So it's a world so worth exploring. You just have to spend the time on it. It's always been surprising to me how somebody would, let's say they go invest $50,000 from their RRSP. So that's after tax money because it's in the RSP, right? And they got a deduction, whatever, but they earn that 50 grand. They might have had to have made 75 to make that 50 at the end of the day after taxes. They'll go in, so that's hours and hours, that's weeks or months of work. And they'll go invest it in an afternoon without doing any research. Like, look at how hard you had to work to make that money, and spend a little bit of time ensuring you make an informed decision when you go into something, right? Don't be afraid to go into something, but do your research first, right? Because there are a lot of great groups in this market, and there's some that are less than stellar. So make sure you understand the difference between the two. And then to the entrepreneurs, again, just don't be afraid. You are allowed to raise money. Just make sure you get legal counsel. Make sure they're good legal counsel that has expertise in securities law. Not all lawyers are created equal. And then hit the ground running.
Fantastic. Craig, I want to say thank you for your time, your insights into what Olympia Trust does, what it means for entrepreneurs and investors, and the opportunities that exist out there. You need the education. Of course, you are hosting a webinar, and within our community, we're supporting that. We believe so strongly that the education is the foundation for making really great decisions and getting the maximum returns on investment by doing it the right way and following the rules. It's always the game we got to play.